Hi, in this video we are going to discuss about your format of balance sheet, which is coming under part 1 of schedule 6 of Companies Act 2013. So this is a format of how you're going to draw a balance sheet. I will discuss each items along with the notes, like the note number. You will have some note to be prepared while you are doing a balance sheet. Along with that, we are going to discuss it. So it will be a longer video. Please listen to it carefully and revert back if you still have doubts after watching it. Okay. So the first thing what you have to start with is the name of the company as usual. So do not forget to write the name of the company and also the balance sheet of so and so company as on this date. So here I have attached a picture of a balance sheet which is in a vertical format. So I'll discuss each and every items individually. So a balance sheet basically consists of two items. First one is equity and liabilities and the second one is assets. So equity and liabilities is something which we owe to others or outsiders outside the company or an organization. So it is something which you have to owe back or which you have to pay back to someone in the meantime or in a later period. So under equity and liability, when you are preparing a balance sheet under company's account, it is divided into four subdivisions. Basically three. The first one is shareholders fund. Second one is it is separately given as a share application, but second one you can consider as non-current liabilities, and thirdly or fourthly current liabilities. So basically when you divide a balance sheet or when you divide the liabilities side of the balance sheet, you can divide it into shareholders fund, non-current liabilities and current liabilities. So we will see each and every items coming under shareholders fund. So shareholders fund is again divided into three main divisions like share capital, reserve and surplus, and money received against share warrants. Okay, so this shareholders fund is a very important item which will come under equity, whereas non-current liability and current liability will always come under liability. That is why this side is on the whole known as equity and liability. So when you write down the transactions which is coming under equity, only the shareholders fund will come. All other non-current liabilities and current liabilities are coming under the heading liabilities. So I will discuss equity first and then I'll go towards the liabilities. Okay, so equity, the item which is coming under equity shareholders fund. Under that, the first item is share capital. So whatever you are writing in a balance sheet, it will have a working note, and after preparing the working note only, you will be able to post the net amount in the balance sheet. So I'm going to show you the working note of share capital. That is note number 1. So note number 1 consists of in some companies or in some balance sheets, you will be seeing two types of shares, which is equity shares and preference shares. So whatever the authorized capital is given for the equity share and authorized capital given for the preference share, it will be noted separately. So it should be shown separately. You cannot combine the both equity and preference shares together. So for authorized capital of equity shares, whatever the amount is given in the question, you just write it down in the outer column and just give a double line so that it is known as balanced. Okay, and in the secondly, if there is preference share given in the question, write the amount of authorized capital and give a double line, and there will be issued capital as well. So write the amount of issued capital and also give a double line. In case of subscribed or paid up capital, in some questions you will find calls in arrears or forfeited shares. If there is any adjustments given in the question as such, you have to write the total amount of paid up capital in the inner column, and you have to subtract the calls in arrears if given in the question. And if there is any forfeited shares, you understand, if there is any forfeited shares given in the question, you have to add it back to the paid up capital, and the total amount you have to balance it in the outer column. So after balancing all these things, you can take it back to the balance sheet format and post it in the balance sheet format. Okay. And so that is about share capital. Next items given in the equity and liabilities is reserve and surplus. And reserve and surplus, what do you mean by reserve and surplus? It is a amount which is kept, it is a paper transaction, but it is a certain sum of amount which is kept as a reserve. Reserve means kept for the use in the future in case of any emergency. So if there is any emergency situations or any situations which has occurred in the organization which is not predetermined, or without your knowledge, if there is something happening in the company all of a sudden, in order to meet that losses which are incurring due to such situation, there will be always some sort of money kept in an organization in name of reserves, and there will be surplus also. So that is the second item coming under shareholders fund. Third item is money received against share warrant. So share warrant is a type of liability or a type of equity or type of a right which is given to the shareholders to convert their shares into equity shares or shares into money or everything. So that those type of items or transactions are kept under the name money received against share warrant. So in future terms, sometimes the shareholders will be needing to convert the equity shares into money or money to equity shares, all those things. So these three items are coming under equity. So we will see the second one, reserve and surplus, which is coming under the note 2. Since this is an image, there is no note numbers given, but when you are writing the format, please make sure you write the note numbers which is mentioned below. Okay. So for reserve and surplus, the working notes which have to be prepared comes like this. So first thing is general reserve. So if in your question, if there is any opening balance given to the general reserve, you're supposed to write the opening balance of that general reserve here in the inner column. And if there is any adjustments given in the question regarding a general reserve, that adjustments should be added back to the opening balance of general reserve. Okay. And security premiums. So every time shares will be issued to the public, maybe it will be issued at par, or it will be issued at discount, which is the amount will be lesser than the par amount or the actual amount. Sometimes it will be issued at premium. So that is an extra amount, which is the normal amount, exceeding the normal amount, it will be issued. So that is meant by at premium. So in case of that security premium, if that extra amount which you are paying for a share, that extra amount will also be added in the reserve and surplus. Okay. And if you are redeeming the same preference share which you have offered for premium, the premium on redemption of preference share, that extra amount for redemption of preference share will also be subtracted from the securities premium. So for example, if you are giving a security premium of 1 rupee as a premium amount, that extra amount is given in the inner column, and to that amount you are subtracting the redemption of preference share. So whenever there is adjustments given in the question, you have to take care of that. Okay, and apart from the general reserve, if there is any other reserves given in the question, like capital redemption reserve or capital reserve itself or debenture redemption reserve. If there is any other redemptions or any other reserves given in the question, that also will be added in the reserve and surplus. So to make it more simple, if there is an opening balance of general reserve, please keep that opening balance in the inner column, and to that opening balance you can add if there is any adjustments given in the question regarding GR or general reserve, and if the company has issued the shares at premium, that extra amount will be added here, and the redemptions, if any, given in the question, that will be subtracted from the amount. And apart from general reserve, if there is any other reserves given in the question, that also will be added, and the total reserve will be kept to be transferred there. There in the format, what is given in the format C, reserve and surplus. So you cannot simply post the total reserve. You will have to add reserve and surplus, and that total amount will be posted in here in the format, isn't it? So after reserve, you also have to see for the surplus. So coming to the surplus, you can see in the question if there is any profit and loss credit balance. If there is any credit balance of profit and loss, that will be posted here, and to that the current year profit which you are finding by preparing a statement of profit and loss account, that will be added back to the balance of profit and loss account. Okay, so the credit balance of profit and loss given in the question, to that you're adding your current year profit. And if you have prepared an appropriation account or a profit and loss appropriation account, the transfer to GR, whatever items is there, like transfer to general reserve, final dividend, interim dividend or proposed dividend which is given in the question, that amount will be subtracted. Okay, and to be very careful, the corporate dividend tax of 17% on interim and proposed dividend should be calculated and subtracted from the profit. Okay, so 17% of corporate dividend tax whenever you're issuing an interim and proposed dividend should be subtracted from the total amount of this profit. Okay, so these adjustments, after making all these adjustments, you take the total of reserve and total of surplus, add it together and post it back in the statement of balance sheet. Okay, so that is with the first shareholders fund, and money received against share warrants, if any, will be given directly and it can be posted directly in the statement. Okay, next item is share application money pending allotment. If there is any such items given in the question, it can be directly posted in the balance sheet. And thirdly, non-current liabilities. So non-current liabilities and current liabilities, as I told you, will come under liabilities head. Okay, so what do you mean by non-current liability? Non-current liability is a certain sum which is to be paid to the outsiders within a period of 5 years, which is more than 1 year. So the time period for payment of these borrowings made is more than 1 year. But in case of current liability, the payment or repayment of whatever is borrowed should be made within a year. That is why it is known as current liability. So you're going to see each and every items coming under non-current liabilities. Okay, so the first thing is long-term borrowings, deferred tax liabilities, other long-term liabilities, and long-term provisions are the 4 subdivisions coming under non-current liability. So we will see the working notes of each and every non-current liability separately. So coming to the notes, long-term borrowings. So in case of long-term borrowings, as I told you, the repayment of these items will be made that is beyond 1 year. So the time period for repayment will be beyond 1 year. So the items which will come under long-term borrowings are debentures, bonds, term loans, public deposits, and any other kind of loans and advances. So if there is any items given in the question based on these, it will come under long-term borrowing. Add all the items together and the total will be taken back to the statement. Okay, and the next item given there was deferred tax liability, the net amount. So what do you mean by deferred tax liability is that every company will always have an accounting income and also a taxable income while you're filing ITs. So when you're calculating the taxable income and accounting income, if the taxable income is greater than the accounting income, taxable income is greater than the accounting income, the difference, whatever we are finding, will be stated as deferred tax liability. And if accounting income is more than taxable income, it will be a deferred tax asset. So whatever it may be, any two, deferred tax liability and deferred tax asset, is a paper transaction. So if there is any such adjustments or items given in the question, those items will also be posted in the statement of balance sheet. Another long-term liability. So premium payable on redemption of preference or debentures. When there is a premium which is to be payable, that premium amount will be shown in the long-term liabilities. And long-term provisions. What do you mean by long-term provisions? Provisions for retirement benefits of employees if given in the question. Provision for warranty claims. If there is any such items given in the question, it will be termed or stated under long-term provisions. So these are the main items which will come under non-current liability. So apart from the non-current liabilities, the last one is current liability, and current liability will always have 4 items like short-term borrowings, trade payables, other current liabilities, short-term provisions, etc. So we will see each and every items coming under short-term or current liability. So short-term borrowings, as the name suggests, the borrowings which has to be repaid within 1 year will be coming under current liability. So some of the items which will come under short-term borrowings are bank overdraft, cash credit from banks, any deposits, loans from other parties. Okay, all these kind of items will be coming under short-term borrowing. So if there is any items given in the question, add all those items and take the total amount to the short-term borrowings in the statement of balance sheet. Next is trade payables. So trade payables, under that trade creditors, sundry creditors and bills payable are the usual items coming under trade payables. And the last thing is other current liabilities, which cannot be stated under the normal current liabilities, like outstanding interest on loans, outstanding interest on debentures, outstanding expenses, unpaid dividend, or calls in advances. All these kinds of items will come under other current liabilities. And lastly, short-term provisions. Okay, short-term provisions are some kind of provisions which are made for tax, for dividend or proposed dividend, or provisions made for employee benefits. Any kind of provisions which is made will come under short-term provisions. Okay, so this is all about the liability side of your balance sheet. And after short-term provisions, the next side of the balance sheet is the asset side. So asset side, as you know, it is simply divided into 2 as non-current asset and current asset. So we will see each and every non-current asset separately. So the main first division coming under non-current asset is fixed asset. Okay, so fixed asset, under which there are certain other subdivisions, which is tangible asset, intangible asset, capital work in progress, intangible asset under development. So let us see what all types of tangible assets will come and what all types of intangible assets will come under non-current asset. So coming to the asset. So as you all know, what is tangible asset? You can feel it, you can see it, you can touch it, everything, isn't it? So some of the items coming under tangible assets are land and building, plant and machine, furniture, fixtures, vehicles, office equipments, etc. But if there is any depreciation adjustments given in the question, that should be made here in the working note itself, and after making the provisions for depreciations or after making adjustments regarding this depreciation only, the total amount only should be taken back to the balance sheet. You will understand it better when you do a problem. Okay. And next one is intangible assets. So any intangible assets like goodwill, copyright, patent, license and franchise, everything should be treated as intangible asset. And in the same way of tangible asset, if there is any adjustments like goodwill written off or any such adjustments given, that should be made here in the working note and then should be transferred back to the balance sheet format. Okay. And capital work in progress and intangible asset under development. So in case of tangible assets, if there is any work in progress happening, that will be stated. So remember, if there is any work in progress under tangible asset, it will be posted in the capital work in progress. And if there is any work in progress under intangible asset, it will be posted in the intangible asset under developments. Okay, so that is about the first part of fixed asset. And next one what is given in the format is non-current investment, deferred tax asset, long-term loans and advances, other non-current assets. So let us see the items or working note coming under all those items. Okay, so come fast. So non-current investment. Next item is non-current investment. So if there is any investments which is non-current, which is not to be paid immediately, like shares, debentures, bonds, or investment in any kind of property or equity instruments, or preference share, or mutual funds, investment in partnership firms. So any kind of investment which is outside your organization other than your own firm, all those kind of investments will come under non-current investment and take the total of the non-current investment, post it back in the balance sheet. Next is deferred tax asset. As I told you regarding the accounting income and taxable income. Accounting income, if it exceeds, then it will be treated as deferred tax asset. So if an item is given like that, it will be posted back in the balance sheet. And long-term loans and advances, if any, given in the question, and other non-current assets, if any, given in the question, will also be posted back in the balance sheet. And next comes the current asset. Current assets are asset items which is to be paid back immediately in that year itself. So items coming under current asset is current investment. If there is any current investment made, it should be posted directly back. And for inventories, some of the items coming under current asset is inventory. So in case of closing stock of any inventories, write the closing stock of that inventory here, and if there is any adjustments to be made, it should be made properly. Stores and spares, loose tools, goods in transit, all items will come under inventories of an asset. Okay, trade receivables is bills receivable, debtors, all those kinds. But make sure if there is any adjustment regarding provisions of bad and doubtful debts, all those things, that adjustment should also be made here, and only the net amount is taken back to the format. And cash and cash equivalents like cash in hand, cash at bank, all those things, either you can post it directly, otherwise make an adjustment here in the working note and post it directly. Okay. Next is short-term loans and advances. And any type of assets which cannot be posted under any of these heads, it can be posted as other current asset. So with that, the format of the balance sheet explanation is done. So when you are doing a problem, you have to make sure that all the adjustments are done and it is written in the proper format, which is the vertical format of balance sheet, which is coming under Schedule 6 of Companies Act 2013. Thank you.